Hello friends, my name is Dr. Bharath Chandra. Today we are replying to certain questions which were asked during our question and answer session and which may be useful for everybody. But one attitude which I want to correct. Many people think if the question I have asked is not there in the video, then what is the point in watching the video? It's a waste of time. If you want to invest in stock market in a profitable manner, you must have very good knowledge and you must understand that in others questions also there are so many things to understand. Shreyas Vastrad has asked this question. If I start an SEP for various companies for a total of X rupees, won't the X rupees increase in the next month as the price of each share increases? Very good question, very practical question. Let us imagine you have 5,000 rupees to invest every month in SEP. I invested this month. Next month, the market has gone up by 2%. Now it becomes 5,100. Two choices. Either you can increase your budget by 100 rupees more, or you can refuse and say only 5,000 worth I will buy, so I will select two more stocks from the same portfolio of 10 stocks which I have selected. Contrary to this, let me ask you a question. Every year your salary goes up by approximately 10% because it has to beat the inflation. Why can't you increase your 5,000 by 10% every year? This year 5,000, next year 5,500, so on and so forth. Now, this is a positive question because they are talking about SCP value going up. Some people tell me, sir, every month if I am buying the stock, my average is going up. How am I going to make profit? Answer is very simple. After 10 years from now, your stock may be 4 times of what you have now purchased, and then your average could be much less. 20 years later, significant improvement will be there. One more interesting practical example I'm giving. Rohan has been purchasing in SEP for the last 6 to 7 years, and his average of Titan is in the range of 1100 only, and the market rate is 2200 to 2600. So very important, you keep on buying, and if the stock doubles once in 3.5 to 5 or 6 years, that is a very good profit. Contrary to this, many other people ask me a question nowadays when the market has started sliding down. Sir, I am buying particular stock. Now the average has come down. Will I undergo loss? Perfect. Both ways you're asking me question. Going up is a problem. Coming down is also a problem. Please understand one thing. Finally, the market direction is upwards. Temporarily, it may be down. When particular share has come down, that is a discount sale, and you should be happy for the next 6 months to 1 year. I am getting the stock lesser than what I purchased. My average value is coming down. So, both ways you will stand to benefit. Second question, Satish R. Good evening, sir. Thanks for your service to Karnataka people. Whether we can invest more at Jubilant Food Works before the split, that is 20th April. The fundamentals are very good from many years. Perfectly said. Jubilant Food is a very good company. Fundamentals are good. Now it has already been split. It is in the range of 400 and it's a very good time to buy. But one particular aspect I have to clarify. Just because a share is going to get split or getting into bonus or dividends are coming, that is not the right criteria of buying a share. Because the share is fundamentally good, it has got good market share. In the coming days, it is sure to go up. That should be your concern or consideration for buying, not any other factor. So please make a note of it. I hope all of you understood it. Next question, Sanjaya PR. Dear sir, kindly give your opinion about PMS in Motilal Oswal, Reliance PMS, Tata Asset Management PMS for lump sum investment above 50 lakhs in one shot for 15 years. Is it profitable or loss? Normally, all these private companies look after your money very well. PMS means Portfolio Management Services. You can Google and find out more details. They have a particular amount as the minimum amount, and when your profits are coming, they will collect anywhere from 20 to 25%. Of course, it is profitable, especially if you look at 15 years. However, I am giving you a clue. If you are going to invest in stock market directly and you have got good knowledge, you have taken Dr. Bharath Chandra's workshop, you have been seeing all the YouTube videos, then PMS may not be necessary. You can manage your funds by yourself. 15 lakh, you need not go lump sum. You can go 4 lakhs into 12 months or 5 lakhs into 10 months, something like that. You're going to make more profits this way. Next question, Vishwa. SBI small cap, PGIM mid cap, Axis blue chip. Sir, please tell me how is my portfolio? Vishwa, I am very honest. I don't want to tell you something which I don't like to tell you. Normally, in mutual funds, you get only maximum 12 to 13%, whereas in stocks directly you get anywhere from 15 to 18 to 25 to 30% depending on the stocks you have selected. And you may think, what is the difference if I get about 5 or 6% more? But let me tell you, on a long run of 10 to 15 or 20 years, this 5% will make up a difference of somewhere around 30, 40, 50 lakhs or even a crore depending on what is your invested amount. However, if you want to invest in mutual fund, want to find out which is a profitable one in a particular sector, means in mutual fund there are many sectors, means equity mutual fund, hybrid mutual fund, debt mutual funds, etc. And if you are a young person, you will opt for equity mutual fund. And if you want to see which is the best one, my suggestion, go to moneycontrol.com and click on the mutual fund section. Plenty of choices given, and they give the mutual funds in the ranking of which is more profitable. Follow that. My suggestion for rest of the people who are going to ask questions on the same topic, this is a yardstick. Virendra RS, sir, please teach red line to red line technique, because in short term I want to learn one or two indicators. Virendra, it is very difficult to teach this red line technique in YouTube, because YouTube is meant only for 6-10 minutes videos, because nobody will watch a video. Plus it is live. Normally teaching this red line to red line takes 6 to 8 hours. In our workshop, technical analysis section deals with the thing in detail. Only technique is not good. We have to describe various situations and how the whole thing will be presented in front of you, how we are going to make a loss or profit depending on your alertness. So my suggestion, take some time off your schedule, join Dr. Bharath Chandra's workshop. You may think you are saving some money and you are becoming penny wise, pound foolish. Later, when you are owning a huge amount of money vis-a-vis your own management, you will realize how foolish you have been in not attending Dr. Bharath Chandra's workshop. This has been the experience of large number of people who have taken these workshops. Hitesh NT, sir, in mutual fund, which multi-cap fund is good for starting investment for long term? Already explained. Go to moneycontrol.com, mutual fund section. Purnima Belagali, sir, do we need to put stop loss for buying in moving average? I know Purnima must have taken our workshop. It's a very practical question. Purnima, when you follow red line to red line, no stop loss is required. However, the day or 2 or 5 days, as soon as you buy at the red line going up point, suppose you buy, suddenly the market falls 2 or 3% in Nifty, then your stock would depreciate more than 5 to 10%. In that case, you can keep a stop loss of 5%. So if it hits, be happy, because that's the maximum loss you can undergo. Otherwise, it could be 10, 15, 20% too. However, once you have purchased stock and it has gone up by few percentage and it is already 5-10 days, then stop loss may not be required, because you are waiting for the stock to come and touch the red line at the top or at the bottom. Who is going to decide the price of a stock? Very good question, but the answer has to be elaborate. Normally in our workshop, we spend more than 1 hour on this particular topic. For example, 2 or 3 days earlier, we have made a video how fundamental analysis and the profit and loss of the stock decides the price of a particular stock. Now is our time for the fundamental analysis of most of the companies that are going to be announced in the market, and you will see wide fluctuations. Again, let me give an example. There is a war that is going to continue. Inflation in the country goes up. Prime Minister changes. Political atmosphere changes. And then there is a inflation. There's all round negative sentiment. All these things will decide the price of the share, not the broker, and they are called market forces. Friends, this is what we have presented in this episode of this video. If you like the video, press the like button, send this video to all your friends. If you are not the member of Stock Market Academy, this is a time to become a member. Thank you for watching the whole video. Bye bye. All the best.